Good morning. Welcome to my weekly update. Well, the week gone by saw a flattish Sensex, but a mid-cap index which grew fairly strongly at 1.2%, and small caps continue to be a little bit under pressure with a slightly negative bias, although flattish. What is the reason for this? Well, the same story that the FIS continued selling 3,600 crores outflow, but much lower than what it was in previous weeks. But DII buying continued as usual to be strong with 22,000 crores this week. So that explains the fact that the mid caps got a strong support. And from a sector perspective, if you recollect, the previous Friday we saw a huge depreciation of the rupee. So the spillover effect saw that the IT sector, the pharma sector were among the positive outperformers, and the banking sector, both PSU and private sector banks, performed well on the back of rising credit growth coming through. So I think the laggards were coming from profit booking, oil and gas, a little bit of a profit booking. So apart from that, there was nothing special in this week. But for looking for next week, the last day came the GDP data. So that's what will trend this performance for this week, and you will see that a strong, better than expected 8.2% real GDP growth gives a lot of reasons to justify India's valuations to FIIs and to give a strong feeling that the tariffs have been well absorbed by the economy. So I expect that this positive trend will start off for the market, but then as the week progresses, two things I expect. One is in this GDP data, there is hidden a small negative, and that's the nominal GDP dropping to 8.7%, which means that the GDP deflator is only 0.5%. We all know WPI index came in negative and CPI was very low. So this low inflation has two impacts to it. First is that future EPS growth. As you know, the market EPS growth tracks nominal GDP. So nominal GDP, which was at about 11-12% about a year ago, is now just below 9%. So corporate earnings for going forward for the future may get impacted. So this is something the market will try to absorb. The second thing is, of course, is that it's not just the GDP, but there's a heavy data-filled week. So what is that? Because if you saw the GDP growth happen on the back of government capex continuing, private consumption reviving, although for just for a few weeks, and strong export growth because we were front-ending before the tariffs came into effect. So for the future next 2 quarters, I think the GDP rate will come down from the 8.2 because RBI's own projection for the year is 6.8. Consensus is about 7. So second half, don't expect the same GDP growth of 8% to continue. Then, of course, RBI rate cut, we'll see how that goes when PMI data is also expected. All of these will decide the bias for the market for the next week.